Okay, so I need you guys to understand one thing really, really well, and this is going to be straight to the point. Let me quickly just remove these things that I have here because today I entered in a trade on pound dollar. Let me show you on the Discord. We were talking like live stream, we talked about it. Discord, we talked about it. This was one of the rare occasions where I also gave a trade alert where I talked about so I talked about my entry. I gave the fact that I reduced my stops. Then during the live stream, I explained why I didn't reduce my stops anymore, and I will keep you guys all updated because the market was looking like it was going to take me out for a loss. But I personally didn't really care because, in my opinion, the market overall is still bearish. And so, since I believe that the market is overall still bearish, then why would I want to cap my trade when I believe that, hey, yesterday's high, I don't expect it to even be breached. So with that in mind, I actually increased my stops back to -1R, and then eventually I took profits. I was out the whole afternoon, but I took profits that it wasn't really at the final TP, but it was a 1.7R. Let's call it 1.6R. It doesn't really matter. But there's one very, very, very important lesson on trading psychology right here, which is how can you avoid feeling emotions? Like, what is emotion? And this is one of the most, I promise you, this is one of the most important concepts you will hear. And it's so crucial. And everyone is trying to sell you on a psychology course when everything can be broken down as expectation and reality. So let me quickly get the whiteboard and I will show you guys even better. So if we do this, so there's an extremely important point to be made that you feel negative emotion when what you expect and the reality is not what you expected. Or when what you expect and the reality do not coincide, which means that, let's say, and this on the negative. So let's say you expect a 1R win and it's a 1R loss. Then this discrepancy between 1R win and 1R loss is going to be emotion. So let's break it down very, very clearly. So let's do expectation and reality. And let's understand that every time you feel emotion is because, let's say you have the expectation of 1R and you take a -1R and the market gives you a -1R, this gap right here, which is a 2R gap, is your emotion. So this is emotion, right? And this is, like, believe me, this is, oh my God, fucking hell. This is something that I have very near and dear to my heart, and everyone inside of the Simple Trading Edge knows that this is something that I have very near and dear to my heart. So leave a fucking like, because these things are, I'm giving you all of these for free. You haven't paid me to give you these. And I do this because I love to talk about these things. So leave a like, and just leave a like. So the gap between expectation and reality is going to be emotion. So what can we learn from this very, very simply? Well, if you reduce your expectations and the reality remains the same, because you can't bend reality when it comes to trading. It's like, don't tell me anything about the manifestation or whatever in the financial markets. It doesn't happen. Believe me, I've been burnt way too many times believing that there's some law of attraction that happens in the markets when it's simply not true. So today is the perfect example. I was like, I think I'm going to take a loss. I don't mind taking -1R instead of even a -0.6. Don't really care. I'll take the -1, whatever. So what did I do? Notice how my expectation is always the worst case scenario. What is the worst case scenario when you enter in a trade? The worst case scenario is you take a -1R. And let's say you then take a -1R. What is this? This is no gap. There's no gap here. That is why I would not have felt emotion if I would have taken the loss. During the live stream, I was saying, no, I actually expect to take a loss and I wouldn't be shocked. I'll just re-enter. It is what it is. because I still expect the market to move in our direction. I literally said this in the live stream. Then what happens when you trail your stop loss to break even in the market when the market is running 2R? What do I expect? A break even. That's what I expect. I expect a break even when the worst case scenario of the reality is a 0R, when it's a break even. It does not matter if a trade is running 7R, 10R, whatever it is. I believe that the market is still going to reverse, take me out for break even. And let me tell you, if you are not comfortable with that, that's maybe because you're risking too much or you're leaving too much profit on the table. Which means, why would you feel negative emotion when an 8% trade pulls back? Because you could have just locked in 8%. Just lock in the fucking 8%. Right? But no, you want to be greedy. Your expectation is at 10R, and then the trade pulls back to 0R, and you take the break even. And what is this? This is huge emotion, and you are going to revenge trade. It's as simple as that. That's what this is. So, worst case scenario, we always ask ourselves, what is the worst case scenario of this trade? Is it a loss? Is it a break even? Is it a tiny win? Is it a large win? Whatever it is, whatever your stop loss is, you expect your stop loss to get hit. If you don't, then you will have emotion because there's going to be a gap of your expectation and the possible reality. And if that reality comes into fruition, then you will have emotion. So your number one thing you have to do when you enter in a trade, expect a loss. When you move a trade to break even, expect a break even. When you move a trade into tiny profit, expect a tiny profit. Don't expect that the trade is going to TP, because if the trade does not go to TP and reverses, this is going to be emotion. All of this pullback is going to be emotion. So the number one thing that I'm telling you is what the fuck was that? And that was on video. That stays there. Because this is not going to be edited. I don't care. So, what did I do today? So today, literally what I did was entered in a trade. As soon as I entered, the trade actually went into profit, so there was not that much expectation that the trade was going to go into a loss. Then the trade moved all the way down. I learned from the fact that everyone inside of the Simple Trading Edge took shorts on euro dollar. Like, this was not mine, but so many people traded short on euro dollar. I was so happy to see it, that people were profiting more than me. And I was like, I took pound dollar. And the market started breaking lower. And during the live stream, the market was respecting this bullish order flow. And I was like, it's very possible that the market moves bullish from here, and that I took a full loss. And I'm perfectly okay with that. I even screenshotted it basically at the top. No, I know I talked about it basically at the top. Doesn't really matter. And then when I check it, the market just starts tanking. There you go. The market went to my final target. But my TP was a little bit further on, because I was like, hey, if the market starts stopping here, then I'll just close the trade, which I wasn't at the chart, so I wasn't able to do that. I would have locked in like around the 2R. But yeah, that's basically it. Like, every time the market was in drawdown, I was expecting a loss. That means that if the market would have gone for a loss, I would not have felt that much emotion. I said this on the stream. If the market takes me out for a loss and then gives me another entry, I'll re-enter. I don't care. Because when your expectation does not meet the reality, you will have emotion, which means you will have ego, which means you are not going to take the next trade. And that's when you become unprofitable. So keep that in mind. It's already late. I'm going to go to sleep. I hope you guys enjoyed. Leave a like. If you don't leave a like, then what are you even doing here? You saw this happening. Hope you guys enjoyed. And I'll see you in the next one. Peace. I don't know what...